Welcome to the REITE Club podcast, where the focus is on helping you, the real estate investor, advance to the next level. And now let's join this week's hosts and share ways for you to customize your life.
You know, it comes down to how confident you are in doing what you are doing, and if you're educated and who you're backed up and the credibility that you have built in the past.
And essentially also it boils down to the value you're bringing to the table, right? Like, so in one of our deals, we had someone who's also an investor, but they're like more like a beginning investor. They're like, I haven't joined a mentorship program, but I've been following you guys. I've seen what you guys are doing. If I, instead of investing in the mentorship program, if I invest with you guys, would you guys teach me what you are going through and every single process that with what you're doing? So it kind of became a win-win situation for both of us, because we got that person to invest with us, and in return we were able to just share what we know with them, so that would be helpful for them when they actually start their real estate investment journey. And this person is also getting their principal back. So, but when you were to join like a training program, you're not getting your principal back. You're definitely getting a lot more value out of it, but not the principal. So it was more, that was another strategy that we used in terms of getting investors to invest with us.
So you're still qualifying for 80% loan to value, 75% loan to value based on your T4 jobs, your income, and then you're getting the money for the down payment. Now, are you also sourcing money for any renovations, or like what are you doing with these projects, the 10 doors that you bought? Were they more buy and holds or the BRRRR strategy?
Yeah, sure. So after we got our first house, we are currently in Milton, Ontario, and how the house prices are, we both were tapped out with our T4 income. We couldn't qualify for more. So all the other mortgages that are there, small residential loans, essentially buying it under a corporation, so that they're not looking at our ratios anymore. But we do still have to personally guarantee the amount, and they also do a rent. If they can go and collect the rent up until a total of
like if we default on the mortgage payment, then they have that agreement with us, like the bank gets to first collect the rental income in case we default. But obviously, we have, and then they obviously look at the rental, because these are rental properties, right? So they're looking at the income, they're looking at the income and expenses, they're looking at the DC cap rate and everything before they approve the mortgage for us.
Yeah, and the renovation is always our line of credits, just so that we have buffer. It's not going to be a perfect BRRRR all the time, and there is going to be some money in the deal, but we always pay our investors back. We're okay to take a $10,000, $20,000 loss, just because we're going to recover that in 1 year, 2 year time frame from our cash flow that we're generating in our properties. And our properties, all of them are up north in Sudbury, so prices are still reasonable. The property still cash flow out there, so that's why we're okay to leave some money in the deal.
So you bought all of these, I guess, in the last 12 months. Is that right?
Yes,
correct. Yes. So we started in February 2021, and
onwards. So there's a lot of people that will say, hey, Sarah, where are the deals? How do I find the deals? Yet you guys were brand new, found 4 deals. Like how did you find these? Were they on market? Were they off market? Were they through word of mouth, wholesalers? Give us some insights on that.
Yeah, so all our properties so far were on the MLS, and it is just knowing your market. I mean, if a property comes on the market at 9 a.m. in the morning and we analyze it in the next half an hour, 1 hour, or latest by the evening, our offer is already out the same day. We don't want to wait. If there is an offer presentation, we're not going to wait for an offer presentation. I'm going to give you a bully offer based on the numbers. If you want to accept it, accept it. If not, I am not competing with you, because I know what kind of strategy I'm using, and I don't want to get into a bidding war when I'm doing a BRRRR project. So it's just knowing your market mainly, like analyze as many properties as you can on daily basis. Like properties are at 5 cap. If a property comes at 7 cap, if it's a good neighborhood and there's no catch over there, put an offer right away. And also having because the properties are in Sudbury, right? So we cannot go and look at all the properties before putting offers. So,
and just a disclaimer to that, like, yes, we are able to, because we run all these numbers, we know what property is a good property, we know what property is a bad property. And the reason and obviously the kind of properties we put offers to, they're not the best looking property in the neighborhood. Like, they're probably run down, roof is leaking, tenants are very bad, they're hoarders, there's garbage outside. So there's obviously a reason that we are able to yes, we're doing our due diligence, we're doing our negotiations, but obviously one of the biggest reasons we're able to do the negotiations is because of the condition of the property. So like we say for investors, we don't want the best property on the block, we want the most rundown property on the block. So we can make it a good property and get them do the refinance and get the money out.
You got to add value. That's how money is made. It's not just through buying something. I mean, again, there's other different types of investors, but the ones that are like wanting to scale and, newer or still in the growth phase of their journey, it is important to add value to properties rather than just buying something to just sink in your money and do that. So, Sudbury's in Ontario. Ontario has pretty strict rules when it comes to landlord tenant stuff. So you're getting these properties with tenants in there.
Yes.
What process have you had to use in order to burr the properties so that you can do the right renovations and reset the rents?
So let me start. I mean, there's a trick that we use, and then we haven't told it to anyone. So
good. So you get a trick here on the podcast, the first ever. Let's hear it.
So if we get the opportunity to do the walkthrough during the inspection after we have received the accepted offer, we go in, we have a conversation with every tenant in there. If it's a 20-unit building, we'll have conversation and try to have conversation with the maximum of them. And it's Karan's trick. So why don't you?
So actually, I actually got this trick from Sean Rea. I was just listening to one of his podcasts, and like he was speaking to someone. He's like, "So how do you, figure out whether you want to do a firm offer on a property or not?" So I just followed his advice, and what we essentially do is when we're doing the home inspection, I am walking with the home inspector in every single unit that we have access to. And then while I'm doing that and the home inspector is doing its inspection, I'm actually speaking to the tenant. And when I'm speaking to the tenants, I'm asking like, how long have they been here? What do they think of the property? Any issues that they have been having? And so essentially I'm trying to kind of gauge how long are they going to stay in the property during this conversation. That is the intention that I'm trying to get to. And sometimes the tenants are like, oh, you know what, I'm okay. Like I'm thinking of moving, or, like this XYZ things leaks in this property, or this needs to be repaired. So you're able to get a lot of insights while having this conversation to make a decision whether you want to firm up on an offer on this property, or if the tenant says like, hey, I've been here for 30 years and I'm not moving, then, it's going to be a difficult cash for keys conversation. But when the tenant, oh, I've been here for 2 years, and I'm thinking about moving. I have like my daughter or sister living in the nearby area and thinking of leaving. Then okay, this can be a very good potential cash for keys conversation. So that's what we do in terms of when we're walking through the property before we firm up the offer.
Yeah, and if they're students, we don't even bother to go and offer them cash for keys. They're going to give in a semester or two, as long as they're leaving 12, if we have a promissory note for 12 months, as long as they're leaving at the 9-month or 10-month mark, we're okay with that. And we do cash for keys with the tenants who have been there for a while. If a tenant tells us that, hey, I'm just here for my daughter's education and her semester is over, or she's going to get a job in Barrie, and okay, let her live, and then we'll not bother her too much. And if she doesn't leave by that time, that's when we're going to approach her and have a different conversation. But it's mainly gauging the interest before even we firm up the deal, and that, hey, is this property going to be a potential burr if we have to return the money in the 1-year time period
to our investors. And in addition to that, while we're doing this inspection, we're also identifying good tenants versus bad tenants. So tenants we would potentially be okay with keeping for them to naturally turn over, and tenants we want to go with the LTB route, because some of them could be hoarders, and we've had 2 tenants that we used LTB to evict them. So this is also a gauging process. So one thing which I would highly recommend everyone does, if it's possible, to go visit the property while the home inspection is happening, because this will give you a lot more information about the property that just maybe just reading the home inspection report might not give you that information.
Mm-hmm. Yeah, no, absolutely. So are you getting these under contract with a condition of walkthrough or something along those lines, so that you can, once you've talked to the tenants, decide if it's for you or not?
Yes, 100%.
All our properties have a good conditional period, at least 2 weeks of conditional period. And
the sellers in this market have accepted it. That's interesting.
Yeah. It's getting more and more challenging for sure. So what we'll do is remove the financing condition, but we'll still have the home inspection condition.
Because like home inspection is key. You need to know what you're buying into, because there could be structural issues, there could be issues that you just don't know about. So unless you have like a big portfolio of properties that are sustaining you and you're okay with just taking a loss or so if something unpredicted comes into play.
Thanks for listening to the REITE Club podcast, where the focus is on helping all levels of real estate investors advance to the next level and help you customize your life. Be sure to tune in next week at reiteclub.com/podcast or wherever you listen to podcasts. And if you get a few seconds, please rate the podcast wherever you're listening. It helps the show get noticed by others like you, and we truly appreciate it. And don't forget to subscribe.